Over to you.
Thank you so much, Shob, and good afternoon, everyone. And it's fantastic to see so many of you joining us in today's plenary session on People, Planet, and Prosperity, Invest, Finance, and Grow, which I think attests to how many of you recognize that this is here in India and other countries of the Global South that capital and investment needs to flow urgently in order to meet the climate goals of the Paris Agreement, the recent goals of the UAE consensus, but also the broader development goals. We all know the scale of the challenge. I'll just give you 2-3 killer facts, but you know them all. That's why you're all here today. Emerging markets and developing economies need about $2 trillion annually by 2030 in order to have a shot at meeting net zero by 2050. But yet we are very, very far from meeting the goals of the Paris Agreement, and we risk failing the massive investment challenge of financing a just transition. And yet, if you ask me, I come from the OECD in Paris, there is no shortage of globally available capital. OECD and G20 institutional investors alone manage around 64 trillion of assets. But yet only a very tiny, minuscule share is flowing to green infrastructure investment. As of 2 years ago, it was around 300 billion. And it's a drop out of it that goes to emerging markets. So we see the scale of the challenge. We have to channel all the capital available into emerging markets for the just transition, and we have to do it now. We also need to increase the share of MDBs to mobilize private capital, and also to increase the overall private sector investment in those countries. If you take India, for example, where we've been working at the OECD for many, many years, you see the scale of the challenge, but also the amazing opportunity, the boom of renewable power investment, and we have some key leading figures of that success at the panel today. And so I think the key trillion-dollar questions that we need to ask ourselves is how to mobilize private source of capital for climate and development to serve the people, planet, and prosperity. We need all sorts of financing, public, private, or a blend of both, and we need it now. We've witnessed political momentum in recent years, be it under the Indian presidency of the G20 in 2023, and ever since the leadership of the German G20 presidency in 2017 to invest in climate, invest in growth, we heard call for reforms of the international financial architecture, but also for reform of MDBs to disburse their money to increase mobilization and effectiveness of private finance mobilization for climate action. So how do we translate these calls into action? Well, I'm lucky to have a very esteemed panel to help answer those questions. So maybe Anantha, I'm turning to you just on my right. India has demonstrated leadership under the G20 presidency to mobilize private climate finance, to calling on development and climate finance to move from the billions to the trillions, calling for improved effectiveness of MDBs. And yesterday you published a very interesting piece again on how to unlock the energy transition. Moving forward, how do you want to work with private sector and international partners to mobilize private sector investment, not only in India, but maybe also the Global South?
Thank you, Gerald, and good afternoon, everybody. Happy to be here. So I think most of us here are aware that during the Indian G20 presidency, we did bring out the 2-volume report of the independent expert group on how to scale up the financing available with multilateral development banks, how in turn they could use that to leverage private capital. So it's very important that this work, which was completed under the Indian presidency, is carried forward in the coming year. That is one important requirement for mobilizing private capital, because the report is there now. It is time to act on it and its recommendations in terms of mobilizing private capital. But it's also important to understand that apart from doing this, private capital, there is a lot of talk about funding energy transition and climate change requirements. But in truth, much of the talk remains that only. You look at the green bonds that India has been issuing, sovereign green bonds. The discount we get on the yield by issuing green bonds is barely 1 to 2 basis points. So for all the effort and the cost that goes into identifying projects which very rigorously satisfy the criteria set down for green bonds, and getting the rating by Cicero, etc., for our green bonds framework. All of these efforts have translated into 1 or 2 basis points. So in some sense, it is very clear that private capital isn't fully ready to embrace both the risks and the opportunities associated with funding energy transition. Now, if that requires further de-risking by the multilateral agencies or by sovereigns, then that is an explicit cost that needs to be factored in, given the not so great fiscal situation of several other countries after the pandemic and the debt crisis. So I think right now, more than financial resources that is needed, we probably need a memory resource, i.e., financiers and developed countries need to go back to the Paris Agreement and remember that it is about common but differentiated responsibilities. And the second resource I require before the financial resource is also an economic intellectual resource, which is that we need to accept that there are economic trade-offs in terms of doing energy transition versus securing energy availability for our country. So I'll stop here for my initial remarks.
Thank you so much, Anantha. You've always raised important challenges and promises. So maybe Secretary Flasbarth, given what Anantha just said, I want to turn to you. COP28 has achieved groundbreaking commitment to transition away from fossil fuels. You may not expect that first time ever the word was mentioned, with significant contributions from Germany to both climate mitigation and adaptation goals, including to maintain Germany's commitments to international climate finance. What are key priorities moving forward for Germany to make better use of scarce public finance? Because let's not kid ourselves, we don't have plentiful public finances to catalyze private capital in support of the transition in emerging markets for climate action.
Thanks a lot. Pleasure to be here. And let me start by saying that prior to the Glasgow conference, I was privileged to work on the 100 billion delivery plan. And that is very much about the commitment of traditional donor countries to provide the 100 billion, goes back to Copenhagen. And now we have reached the 100 billion, I think, last year. So, but the key purpose of this endeavor was to work on credibility. And that is one of the, maybe the most relevant currency in international cooperation. But it was not so much about what is really needed. I mean, we all know that the 100 billion will never be enough, and that even the doubling or the tripling, the quadrupling would not be enough. And therefore, as Anantha elaborated, we need to have different sources. So we stay committed as Germany, as you mentioned, but we want to open the space to look at the big picture and the real needs. And number one from my side is, first of all, we need to do everything to shrink the problem. To shrink the amount of finance that is needed. And countries can do a lot on that with a regulatory framework. Some call it enabling environment, but it's simply, for example, in the electricity sector, do we provide non-discriminatory access to the grid? Once you do it in many countries of the world, given the cost curve that went down on renewables, renewable electricity is already competitive, and it's a business case. So you don't need an ODA cent for that. And then the rest of the ODA money needs to be in a way that it can multiply its investment through, for example, guarantees, or call it in a broader sense, de-risking of investment. My final point, and but Anna will come on certainly in on that. Of course, we need the IFIs to provide the right instrument set to make this leverage factors from traditional donor country money as big as possible. My final point is it's also about information. If investors don't know enough about markets, they will not invest, or they will invest too late. So I think it's something we have to do together, governments, private sector, foreign associations of our enterprises, to provide a best possible pictures about the investment surrounding. And that is something I discussed this morning with the Ministry for New and Renewable Energy. We want to organize a conference, a platform as part of the RE Invest conference with a focus on international investors and to create a good picture about the opportunities, about the business opportunities in such a huge and vibrant market as in India.
Secretary Flasbarth, thank you so much for this and these very important announcements of collaboration between Germany and India on the Reinvest conference. I do think we need to bring those investors in the country and discuss the key catalytic barriers to it. I think, Anna, the World Bank is such a special position to address and be part of the solution, and yet I think we all agree that business as usual is clearly not working. Can you tell us a little bit how the World Bank is adapting to improve effectiveness of private finance mobilization, especially in the energy transition, which is so critical in a country like India? And how is the bank upping its game to evolve and deepen partnership with private sector?
Thank you very much. And let me also just say how pleased we are to be here, and thank you for making the World Bank part of the panel on such an important topic. So yes, business as usual absolutely will not work, and I think all of us have to recognize that, and all of us have to do our part to really change and step up the game. So at the World Bank, I think like everybody else, we have to accept that when we look at the outlook and what we have seen over the past few years, the amount of climate finance that's flowing into developing countries, particularly in areas that can really make an impact on climate action and the impact from climate vulnerability, is insufficient. We estimate that the 420 billion or so that's going in is far below what we believe is needed, which is about 1.7 trillion by 2030 to be able to address climate action. Now, there are many things we also need to keep in mind. One is that about 85% or so is going to mitigation, and very little is going to adaptation. And if you think of some of the vulnerabilities around the world, adaptation also needs funding. That's number one. Number two, the world spends about $1.25 trillion a year on subsidies for fossil fuels, for agriculture, for fisheries. If we could reduce subsidies and turn this into resources for the energy transition and for climate action, that would be very helpful. Now, what is the World Bank doing to do its part? First and foremost, last year we provided about $30 billion in climate financing. This is about just over 40% of our financing. Our president announced at COP28 that we're going to go to 45% by next fiscal year. We're well on our way, and we want to make sure that we split it between mitigation and adaptation. Now, what we also want to do is really support and provide enabling so that the private sector can step in. And for this, we're doing a number of things. First and foremost, as you know, the World Bank Group comprises also IFC and MIGA, which has incredible and phenomenal tools and instruments that can help de-risk. And I'll be happy to talk about this a little bit later. But we really do need to mobilize. And I'll just give you one example that I have really enjoyed since arriving here to India 2 days ago. We have provided, together with IFC, financing here in India, where for every dollar we brought, we leveraged 40 times. So finding schemes that can unlock what is the most difficult barrier to private sector investment is really critical for mobilization and for leveraging. And at the end of the day, what we need is volume. So finding those opportunities is really important. And we would like to look for more of those opportunities and more of those investments that we can work with. Finally, we need to work within our organization, as I mentioned, World Bank, IFC, and MIGA, but we also need to work with partners, both public sector and private sector, and we need to make sure that we really remove those obstacles and de-risk. And again, I'll be happy to talk about some of those de-risking instruments that we're thinking about again. Thank you.
Thank you so much, Anna. Pramod, maybe let me turn to you. You have championed for many years, 40 years if I understand correctly, the role of innovation and entrepreneurship to develop clean technologies. And your company, Praj Industries, is one of India's most successful companies in the field of biofuels and other technologies. What do you think from your experience, practical experience, are solutions to work to scale up capital, but also how does this reach individuals and companies and make sure that they benefit for a just transition at the front line of climate action?
Thank you, Geraldine. Very good afternoon. I'm happy to be here because the subject which we are referring is comparatively new, not known. Like my friend is having other subjects in energy transition. Now, biofuel, bioenergy, bioeconomy are slowly graduating to different levels. What we try to do is that funding is one aspect, but is not very critical from that point of view. What we try to do is improve the viability of a project, increase the value streams, increase the profitability. For example, if I'm making a biofuel like ethanol, what I can do from the waste, and that waste can be put to gainfully for additional revenue stream. Yeah. Something similarly happening is for compressed biogas. If you do that, we provide fertilizer from the residue. So like that, there's a lot of circular economy which is deployed, and I think in the bargain, the project becomes more and more viable, and the finance or the debt is paid for itself. And that is becoming very popular and common, especially for the socio-economic advantages or benefits which are happening. So I don't think we have that kind of a pressure, though we require some starting capital. It's not so critical here. The technology and the innovation solve it for itself. That's the way we look at it. Thank you.
Thank you so much, Pramod. And maybe turning to complement your very interesting views from the renewable power sector, Sumant, I'm turning to you. India has made huge progress in recent years, and last time I came to Raisina a few years ago, we could see the gap, that has just happened, the leap forward. A new company, Renew Power, has been able to scale up its portfolio of clean energy assets to 13 gigawatts, I think, if not more. The OECD has been looking at that issue of mobilization of private finance for clean energy for I think, 12 years, and including through a program, Clean Energy Finance and Investment Mobilization. And of course, India is a top priority market. So of course, there's been enabling conditions to achieve this, but probably outstanding barriers. What are key priorities you see from your practitioner's experience to further unlock private investment, especially from OECD institutional investors in renewables in India and unlock the promise of clean energy in India?
Yeah, thank you. Thank you for that question, and great to be here, of course, and so to my fellow panelists as well. Look, you're absolutely right that India is doing an absolutely terrific job at scaling up renewables right now. And as we all know, the government has set a target of getting to 500 gigawatts of renewables by 2030 and doing 50 gigawatts a year to get there. This year, we've actually seen that happening in real measure because the pace of auctions has stepped up to almost 3 times of what it was the prior year. So we already had about 40 gigawatts of auctions in the first 9 months, and there's another 50 to 60 gigawatts that will be coming up in the next few months. And that's just a very significant move up in terms of the overall run rate at which the country has been going. And we need to go at this pace for the next 5 to 6 years. Now, obviously, if we try to do such a massive, or try to achieve such a massive target, then there are going to be many things that are going to be constraints that will have to be debottlenecked as we go forward. One of those, of course, is just the simple execution capacity. Are there enough companies out there that can actually even put all of this together and execute projects on the ground? The second, of course, is the issue of equipment. And that becomes particularly relevant because you're also at the same time trying to indigenize the industry, because you don't want to keep, and certainly we as a country don't want to keep importing from outside of the country. And thirdly is the issue of financing, which you talked about. Now on financing, look, there are 2 kinds of financing, and we tend to sort of mix them both up. One is debt and one is equity, and they're both obviously equally important, right? Now, as far as debt financing is concerned, frankly, there is a fair bit of financing available in the Indian domestic market, as also in the international bond markets. But the reality is all this financing is fully commercial. Just because we are doing something with a purpose, nobody is willing to cut us any slack for that, right? And I think that's something that we all have to be aware of, that any financing that comes into our sector comes in on a fully commercial basis. Nobody is willing to take any haircut on returns just because we happen to be doing the right thing for the world as a whole. And so, therefore, it's very important to create the right enabling environment, the right the offtake credit quality, and the right tariffs to essentially make sure that the returns are there for the end investors. As far as debt is concerned, as I said, between multilateral financing, domestic financing sources, the international bond markets, there is sufficient financing available for us. I don't really see that as being, frankly, at this point, a problem area. I think the issue is more on the equity side, because on the equity side, people, of course, take subordinate positions, and a lot of the equity comes with sort of a strategic orientation. And so we need just more equity capital to come in. And I think that is really where we are going to have deficiency as we go forward. So we need to attract more equity investors into our sector, whether it's sovereign wealth funds or strategic companies, or whether it is pension funds or even domestic capital. One of the areas that we actually haven't tapped actively so far is the domestic equity market, the public markets. And hopefully that will change as we go forward. But I know we as a company are listed overseas, and if you look at the global clean tech sort of sector as a whole, they are trading at multi-year lows right now. So notwithstanding the fact that we have this target of tripling renewables by 2030 globally, which we adopted in COP, the reality is capital markets are valuing clean tech companies globally at very sort of not nice levels. And that is constraining the ability of all companies globally, not just in India, but all companies globally to raise equity capital to fund growth. And I think that's one of the things that we don't really fully recognize, that our sector is unfortunately an innocent bystander to the deal with, having to deal with inflation and therefore higher interest rates. And that is actually setting back the whole climate change efforts. And let's just recognize that for what it is.
No, thank you so much, Sumant, and fully agree with you that it's true that the share of equity financing has reduced in recent years for renewable, and we need to address, outstanding risk, and I hope we can discuss that further. And thanks for flagging that we need both domestic and international capital. That's, I think, critical. We've talked a lot about mitigation, but Anna alluded earlier, but also, of course, the importance of adaptation. So maybe, Anantha, I want to turn back to you. You recently called for equal emphasis on adapting to climate change and mitigation, stressing, if I quote you right, that adaptation is the best form of insurance against rising temperature and extreme weather events, with an important role for the insurance industry that I think we're all aware of, including for mitigation and adaptation. But what do you think are key priorities to harness private capital for adaptation, given that it's so much more complex and dispersed to identify?
No, I think when it comes to adaptation, attracting private capital becomes that much even more challenging than it is for emission reduction. Even over there, we come to realize that getting actual money to flow is difficult except for very proven projects for two reasons. One is the technologies still remain unproven on scale, and the dependence for resources on one or few countries is also a challenge. In fact, if all countries march lockstep towards net zero, this problem gets compounded, and paradoxically, it might make the availability of private resources even more difficult. So for adaptation purposes, you need blended finance, and you need public capital, whether it is from multilaterals or from developed countries, to provide the initial backstop or the first loss guarantee. And also we need to evolve mechanisms. We are talking about it a lot, but we haven't arrived at a mechanism for who will get to bear the foreign exchange rate risk. When international donor agencies or bilateral lenders, etc., give money to developing countries, who gets to bear the foreign exchange rate risk? And what is the horizon? There are many of these questions of detail that have not been sorted out. And also the other reason why adaptation projects haven't attracted the capital is that when you actually begin to cost many of these things, some of the complaints we have against fossil fuels, that they do not take into account externalities, applies even to alternatives as well. So, for example, we talked about renewable energy being competitive. Now, renewable energy projects require so much of land and compared to other alternatives. And in a country such as ours, which has the highest population density per square kilometer in G20, If you cost that, then the cost-benefit trade-off does indeed change. So I think the way to attract capital or lower the risk premium is to be fully open and transparent about all the trade-offs that are involved. Only when information is complete between lenders and borrowers, and then the true economic cost of these projects is identified, recognized, and accounted for, will the money keep flowing. Otherwise, we keep talking about trillions of dollars available in private finance, which will flow. It will not, because we are still not come to grips with the true economic cost of these alternatives.
Thank you so much, Anantha. I think your point on trade-off is absolutely critical and was one of the key driver of the launch of Just Energy Transition Partnership with leadership from the G7 in several countries already, be it Senegal, South Africa, Vietnam, and Indonesia. So Secretary Flasbarth, I'm turning to you, as Germany was so involved as a supporter of the energy transition in the launch of those JETPs. Given Germany's commitment to country-led partnership for just transition that factors the trade-off that Anantha just alluded to, what do you think are key priorities, challenges, but maybe emerging lessons that we see to unlock private capital for just energy transition in JETPs that we have already seen established?
Do you allow me just to add 2 words on the
Please.
adaptation piece? Because I think it's very obvious that this part will need for a longer time budget support. If we do everything right, the mitigation part should be the normal business case over the time, but not so in adaptation. And that is so, therefore it's so important to look wherever it is possible, whether we can identify business cases there as well. And a lot lies in the area of nature-based solutions. There you can create it with adapted agriculture, with, for example, rewetting peatlands, mangroves, and so on and so forth. I just wanted to make this point because it's so close to my heart that we need to be realistic in this area. There will be an ongoing demand or need for public support. On the JETPs, yes, it is very, very close to my heart, and it came out of the discussions when we had the change from the Trump administration to the Biden administration, and I spoke with John Kerry. And in this first initial talk under the new administration, we identified that the old formats that we had in negotiation processes, the MEFs and the MOCAs and so on, that they do not fit to the reality of the world we are facing. Of course, there is an obligation of industrialized countries to decarbonize their economies rapidly, but exactly thereafter, the emerging economies are coming, and we will not meet our targets, our Paris targets, without getting them very fast involved. And at the same time, these countries rightly say, well, you were in the past a bigger part of the problems. We are going to be a part of the problem as well, but we still have a need of rapidly developing our economies to serve our people. And that was the logic of the JETP, saying, yes, if we want to have a faster energy transition in some of the emerging economies, then we have to have additional efforts on the old industrialized countryside to help them make it. And again, I want to say we have very different experiences with the JETPs. They are not all the same. For example, in South Africa, you have the huge task of phasing out coal at the same time where you have an enormous load shadowing. But again, at the same time, if you adjust the policy framework, South Africa has everything to be a completely renewable-based country. Therefore, for example, together with the World Bank, we invested a lot in policy-based loans to help them adjust their regulatory framework. And of course, it's differently, for example, in Vietnam, where it's basically a grid issue, where we do have to invest faster into grids. But all in all, I need to say, the collaboration between a number of so-called typical old donor countries, together with the World Bank, Regional Development Bank, and the partner countries. This is added value because you diminish transaction costs of cooperation enormously, and therefore I think the JETPs have a value in itself.
Thank you so very much. I think you've just raised, and Anantha and Sumant and other panelists also have raised that you need to address targeted risk and targeted bottlenecks. And maybe Anna, I want to turn to you, because the World Bank is so well placed to address those policy uncertainty, those regulatory challenges, but also a range of risk. What do you think are key priorities moving forward for addressing them and unlocking private capital investment for climate action, and how is the bank specifically addressing them?
Well, thank you very much. We talk a lot about the need for private capital, but I just wanted to emphasize, and it's obvious, but I do want to say it, just the innovation that is needed in this field is coming, of course, from the private sector. And I'm pretty impressed when I talk to companies around the world about the innovation that they're undertaking, R&D they're undertaking, and that's something that people who work on the public sector side can't do as well as the private sector side. So yes, we need financing from the private sector, but we also need it because all the ideas and the innovation and the emerging thinking is coming from there. So just wanted to emphasize that. So we've spent the last year or so really trying to, as we have been gearing up to, in a very fundamental way, contribute much more in this space, understand some of the key risks that need to be addressed in order to have the public-private play a much bigger role and to alleviate some of the risks and obstacles that the private sector sees. And we have identified sort of 3 big areas that we feel need to be worked on. One has actually been touched just now by Jochen, but it was also mentioned in the previous set of questions, which is there is nothing that beats stability on the strategy, policy, and regulatory side. And just take India, for example, setting a clear target and setting a clear path and plan for getting there has really helped. And now India has a huge amount of renewable energy capacity installed, over 40%. So we need to have this clarity in plan, and this is why the long-term strategies that countries do and the policy and regulatory reforms that countries do, often supported, as Jochen also said, by various instruments that we can use, including what we call our budget support instruments. So I think this is number one. It's very important. The second thing is buying down risk in various forms, and usually in the form of guarantees. And here, the World Bank's been working to see what type of guarantees seem to be most important. Political risk insurance is still quite in high demand from various companies across the world who are investing in emerging and developing markets. But we also see a huge need and demand for project-related risks, whether it is regulatory risk or whether it is payment risk. And we also see the need for, and this is my third point and something we've just started work on to see what we can do to also help in this regard, the foreign currency risk. This is one of the things that come up again and again. Who takes the foreign currency risk when there is a big investment that's taking place, particularly when it's a cross-border investment? So these are the 3 that we're really trying to equip ourselves much better in helping our clients. Stability on policy and regulatory, a very strong package of guarantees, and this is where we're going to be doing some changes internally to set up a one-stop shop on guarantees within the World Bank, combining the various instruments we have across, and then working more to see how we can help address the issues around foreign currency.
Thank you so much, Anna, and very useful point you've just highlighted on the use of guarantee for the most riskier part and targeted risk, but also on innovation. And Pramod, I mean, since Anna mentioned innovation, I feel like I want to turn directly to you. Because of all the role that India has played in improving regulatory environment for unlocking investment in biofuel and ethanol in particular, the role of support to both innovation but also investment, what do you think, looking at now, moving ahead, what do you think are outstanding major policy regulatory barriers to further unlock private investment in biotech in India? in support of environmental goals?
Well, thank you once again. There are a number of issues which come to my mind. First of all, we are doing something from a base on nature, which is agro-based. And the vagaries of nature play a very critical influence on the success of a project. So that is one. The second part is that whatever we try to achieve, it can go for a toss if there are no showers or there is no water, it can affect. So we have to have a foolhardy technologies and we don't have GM is not allowed in our country. So is also in Europe. But USA, they have got Brazil, they have got a GM, which can make them more strong. Anyway, which is not on our hand. The second part is like she said about guarantees of performance. They play a very critical role. And if we can get some kind of a backup for those kind of insurances and all that, I think things will move more fast. So these are the third part of the thing. You know that India has become a launch of GBA, Global Biofuel Alliance, which was done last year. That's a very important step in that direction as a part of extension of G20. Now we can go to different parts of the countries and there will be a level playing field between different countries. Say Africa can produce, because there's a lot of sunshine, they can produce very good bioenergy, crops. So those will be benefited, which doesn't happen in the other part. So like that is being played around with the feedstock challenge, with the process performance, and of course the availability of the feedstock. So I think it's moving in the right direction. I am in fact quite robust and quite bullish that it will happen in the near future.
Thank you so much, Pramod. And I think we've talked about a lot of sectors that need mobilization. We've talked about renewables. We've talked about biofuels, adaptation. I just want to flag, let's not forget also that we need to unlock financing for energy efficiency, for green hydrogen, for financing industry decarbonizations, all topics that we work closely at the OECD and just 2 days ago with the Ministry of Power and key stakeholders on energy efficiency. And all of those key catalytic sectors requires probably a reform of the international financial architecture. And Sumant, I want to turn to you. You've called a year ago on a new concerted efforts between governments and international financial institutions in the lead up to the G20 presidency for India last year, to harmonize standards, strengthen incentive. Maybe a year later, reflecting on last year's achievements, where do you see the next steps, the next priority for reforming that international financial architecture, which is sticking somehow in a business as usual and that we don't easily manage to align with climate and development goals?
Yeah, I'll give you a few slightly controversial and provocative sort of answers to that. Number one is the fact that I think, we obviously have certain multilateral institutions right now, and we are trying to use them. Their mandate essentially was development to begin with. Now we're trying to use the same institutions for climate change. And the question I think we should all ask ourselves is whether, in fact, we need to have specialized climate change lending institutions that have perhaps a more specific mandate to deal with climate change issues and are therefore staffed differently and function differently right from the get-go. So I think that is one thing we should be sort of contemplating and discussing as part of the discussion around the global financial architecture. The second issue is that right now supply chains and trade is becoming a big issue. Countries are really trying to use industrial policy in the green area to try to keep as much within their borders as possible. And that's great, of course, for their jobs and politically and so on. But globally, it's going to result in a massive misallocation of resources in the trillions of dollars. And I think that's not obviously healthy, because that same money could have been very happily used for investments in emerging markets and all of that. So I think that's the second issue that we have to, in some ways, start debating seriously. The third thing is that right now, corporates are not part of the conversation around climate change at all. Governments get together around COP and discuss and at least pledge something. Those pledges, of course, we know are not anywhere close to what it needs to be. But obviously, action is a step that we're not really monitoring that much at this point. But corporates really don't figure in these conversations. And ultimately, almost 50 to 60% of all carbon emissions come from corporates. And we have to have a way of making sure that they get pointed in the right direction and they move in the right direction as well, and that is really not happening as rapidly as it needs to right now. So I think mandates on corporates need to really be strengthened. Yeah. The European Union certainly is trying to move in that direction, and CBAM and all of those slightly controversial things are there. But we really need global mandates, and the best way to get to a global mandate is to have a global carbon tax. And once you have a global carbon tax that is equally applied across the board, then all of these things become a lot more equalized. And that makes the whole system a lot more consistent and compatible. But again, that requires very significant political change and global multilateral cooperation, which I fear we do not have. So I'm therefore a little bit pessimistic about some of these things.
Suman, thank you so much for calling on, improve carbon pricing, but I think also I hear when you talk about mandates for corporate, improve corporate governance rules for corporations to take on internalization of environmental externalities, and that's a topic very dear to my heart personally. I'm mindful that you've been very disciplined to give time for talking with the audience. I'm grateful despite the richness of your intervention. I want to turn to the young fellows sitting at the corner of this room, the Reisner Young Fellows, particularly dear to my heart because I was a young fellow 10 years ago sitting on that chair. And maybe turn to you in priority if you want to ask one or two questions to the esteemed panelists. So maybe you can just stand up and go to the mic that's just sitting in front of you. And of course, it's not the only set of participants that are invited to ask questions. I invite people to just move to the mics in front of each row, and we'll take 3 questions. But maybe the woman at the corner in blue, thank you.
Hello, Alizée from France. I work for the French Development Agency. Thank you for this very interesting discussion. I would have one question actually to increase the investment in the energy field. It's very important also to help the global financial system to green itself by pushing more regulation, by helping to create also climate strategies within banks, private and public, for them to better assess mitigation, adaptation. So I would like to know what your thought on that and what would be toolbox to help those financial institutions to do more on this topic. Thank you.
Okay, so how to target directly financial market institutions, and maybe also, if I hear between the lines, the credibility of their net zero commitment. Shall we take other questions perhaps here?
Thanks. Am I audible? Okay, perfect. I'm Arjun. I work at an Indian electric vehicle and battery company. It's been a fascinating panel. I'm curious about the nature of capital because it seems like capital is beginning to acquire a nationality or a regional flavor. European capital, Western capital, Arab capital, Chinese capital, and so forth. Is this generally a bad thing because we need all the capital there is? Or could there be opportunities for certain regions to come up with a certain brand of capital and promote a certain best standard or certain value proposition they bring to the table?
Thank you, sir. And maybe the woman sitting just behind you.
Thank you. So you talked about renewables, the hydrogen, and how difficult it is to de-risk their guarantees of these investments. But my question is about what about the local communities and the SMEs? Because as we know, 70% of the land use is occupied from the local communities, and they have to de-risk their investments if they want to be innovative and climate change, and to have climate change approximations of their investments. Thank you.
Thank you so much for raising that question. Very, very topical. MSMEs account such a large share of the Indian economy. You cannot address the climate challenge in India without talking about SMEs, and I also involve my local communities. Maybe we stick to those 3 questions. What I want to suggest to the panelists is to take whichever questions you want to address, but also perhaps provide a very brief closing statements to this rich discussion. I wish we had more time, but I think we're running soon out of time, so it's only the beginning and the continuation of an important discussion. Anantha, turning to you first.
No, I think on the question of how to take into account the needs of SMEs, I think it's important. They in fact need hand-holding on many aspects, not just with respect to transitioning, but also to adaptation, because they all need support initially to keep their operations economically viable. And therefore, one needs to, when it comes to SMEs, they also have a problem in complying with many of the disclosure requirements that have come into place. That is why many disclosure regimes do provide some time out for SMEs to comply with them to be able to do so. So currently there is a recognition that small and medium enterprises need more time, more hand-holding, more technological support, etc. And I think going forward that needs to continue, because initially one has to start with those who are in a better position to comply and do the transition. As Mrs. Suman Sinha pointed out, the corporations have to do more, listed companies and large companies with large paid-up capital. So small and medium enterprises will probably have to be given more time to adapt first before you called upon to take shoulder responsibilities with respect to emissions. I'll stop here.
Thank you so much, Anantha. Jochen, I'm turning to you.
Yeah, I will jump also on part of this question, the local communities, not so much the SME side, but the local communities. And of course, again, things are different in different countries. But definitely with a renewable-based energy system, you are closer to the people. With all the opportunities, but also with all the challenges. And looking at countries where you still have a huge demand for electricity and a gap in the supply, involvement of local communities can immediately enhance their economic situation. You can use off-grid solutions or small local grids, and immediately the situation of people in their households, but also, of course, for local business can change. If I look in a country like mine, the renewable electricity is more land consuming, let's put it that way. The former centralized energy structure with coal and nuclear affected a few local communities, but very heavily. Now you have wind turbines and PV everywhere. Mm-hmm. And therefore, if you want to get an acceptance in a country with high population density like in Germany, you need to involve them. For example, if you create ownership, local city-based communities owning a wind park, and then immediately the situation turns around because they have some benefits from this kind of energy transition.
Thank you for raising such important point. Anna, I'm turning to you next.
Yes, and I think I'll address the issue around the global financial architecture and how to stimulate the green, if you will. I think the starting point is one of a recognition that in today's world, actually the renewable energy solutions tend to be the most cost-effective, and usually when we look at least cost expansion plans are in fact the least cost option. Now, a big barrier to this is when there are distortive mechanisms in place, such as subsidies. So that's a reality, too, that we need to continuously address. And that's why the work that we do on policy dialogue, regulatory, economic analysis to see where the distortions are and what type of measures are needed to phase them out. That's number one. Number two, we've been working a lot, along with other multilateral development banks, to do what we call green procurement policies. So there's a lot we can do through public procurement to make sure that there are criteria, mechanisms, incentives in place that also help support the lower carbon, the green options. Thirdly, we've been getting a lot of demand of late to help the banking sectors, in the financial sectors, to do risk assessments to see what is their exposure and how risk-prone are they in their assets to climate risks and climate investments that they have, climate assets that they have. And finally, what's also very important is looking at taxonomy of investments, taxonomy of what is possible to look at through different financing lenses. And the more we can get commonality across these, the more we will see the scale that we need to actually bend the arc towards a much, much stronger deployment towards the renewable energy options. So it's really, at the end of the day, a package. I feel like we've made a lot of progress in the last few years, but we still need to continue to work on this together.
Thank you so much, Anna, for highlighting the need not just to unlock investment opportunity on the demand side, but also addressing the supply side risk of financing. And personally, the role of central bank and financial supervisor is very dear to my heart. Pramod, I'm turning to you for whichever question you want to cover and your concluding remarks briefly.
I must bring the subject of SMEs. The aggregation of waste is a big opportunity. And there are a lot of companies that come with the machinery, and it can be entrepreneurship can be increased with that. The second aspect is decentralized plants. Instead of having one single plant, big capacity, we can have multiple plants of a smaller capacity, and that will give rise to, but India needs employment opportunity also, and they create employment opportunity. So these are the way I look at it, they are very important in the bioenergy space. That's all.
Thank you so much, Pramod. And Sumant, you have the final word for today's panel, but it's not the final word on this topic.
Okay, look, I'll address the question around the capital being within borders because nobody else has addressed that. So look, I totally agree that right now what is happening is that the way the whole regulatory and policy frameworks are set up across, regional, around countries or trading blocks, capital is actually staying within borders. And what we actually need is quite the reverse. We need capital to flow into those areas that are best at reducing carbon. And so if let's say $1 of your capital reduces more carbon emissions in country X, then that's where the capital should flow because we have limited capital. But today that is not happening because of the sort of the lack of flows of capital across borders. So that's, I think, a big lacuna that is sitting there. And that's partly, the way our carbon markets are constructed, unfortunately, are regional. And we need to really, as I said earlier, have fully integrated global carbon markets because that is the only way in which you're going to be able to maximize the flow and the efficiency of capital into the right areas. And that will be best for everybody in the world. So, in some ways, we really need policymakers to step up on this one.
Thank you so much, Sumant, and thank you to all the panelists for such insightful remarks, how to break the business as usual, how to achieve transformative change and not incremental change for mobilizing private capital for climate action at scale. I want to thank them all and thank also all participants who have attended today's session. So please join me in applauding the panelists.